Have you ever looked at a stock and wondered, did I already miss the opportunity? That's exactly what thousands of investors are asking about Broadcom right now. After an incredible run fueled by artificial intelligence, Broadcom has become one of the hottest companies in the entire market. But here's the real question. Is the biggest move already over, or is this just the beginning? Because something is happening behind the scenes that most retail investors are completely ignoring. Stay with me until the end because the answer might surprise you. Let's begin. Before we talk about the future, let's understand why Broadcom has become one of the biggest names in the technology industry. Many people think Broadcom only makes computer chips. That's only part of the story. The company has built a massive business across networking chips, AI infrastructure, enterprise software, cybersecurity, cloud technologies, storage solutions, and data center hardware. One of the biggest turning points came when Broadcom acquired VMware. That single acquisition transformed the company into much more than a semiconductor business. Today, Broadcom generates revenue from both hardware and software, making its business more diversified than many investors realize. Now let's talk about artificial intelligence. This is where the excitement begins. Whenever people discuss AI, they usually think about companies making GPUs. But AI data centers need much more than powerful processors. Thousands of AI chips must communicate with each other at incredible speeds. That requires advanced networking solutions, and Broadcom is one of the biggest suppliers in that space. As companies continue investing billions into AI infrastructure, demand for Broadcom's networking products could remain strong for years. This is one of the biggest reasons investors continue watching the company closely. But here's something many people forget. A great company doesn't always mean a great investment at every price. Broadcom has already delivered an impressive rally. That means expectations have become much higher. If investors expect perfect results every quarter, even strong earnings may not satisfy the market. We've seen this happen many times with leading technology companies. Now let's look at the bullish case. Imagine AI spending continues growing rapidly. Cloud providers keep expanding their AI data centers. Broadcom successfully integrates VMware. Software revenue keeps increasing. Margins remain healthy. Cash flow becomes even stronger. If these factors continue working together, Broadcom could remain one of the strongest technology companies over the coming years. But what if that doesn't happen? What if Wall Street is expecting too much? And what are the biggest risks that could completely change the story? But now comes the part that many YouTubers don't talk about. The risks. Let's start with competition. Technology changes incredibly fast. Companies like Nvidia, AMD, Marvel, and several others are investing heavily in AI hardware and networking. Broadcom cannot afford to slow down. Innovation has to continue. The second risk is AI spending. Right now, major technology companies are investing enormous amounts into AI infrastructure. But nobody knows whether this pace will continue forever. If spending slows down, companies supplying AI infrastructure could also feel the impact. Third, the broader economy. Higher interest rates, slower economic growth, or weaker corporate spending could reduce demand for expensive technology projects. And finally, valuation. Even fantastic companies can experience major corrections if expectations become too high. Now let's answer the biggest question. Can Broadcom double again by 2027? The honest answer is, nobody knows. No investor, analyst, or YouTuber can guarantee a future stock price. Instead of making one prediction, it's smarter to think in scenarios. The bull case, AI spending remains strong. Networking demand accelerates. Software integration succeeds. Revenue and profits continue growing. The base case, growth continues but becomes more moderate. Broadcom remains a strong company but returns become more reasonable. The bear case, AI investment slows. Competition increases. Economic conditions weaken. The stock could experience significant volatility despite having a healthy business. Personally, I believe the most important thing isn't predicting the exact stock price. It's watching whether the business keeps improving. Are revenues increasing? Are profits growing? Is management executing its strategy successfully? Those are the questions long-term investors should keep asking. Now I want to hear from you. Do you think Broadcom is still one of the best AI stocks for the next few years? Or do you think most of the good news is already priced into the stock? Share your opinion in the comments because I'd genuinely like to know what you think. If you found this analysis helpful, hit the like button, subscribe to the channel, and turn on notifications for more deep dives into the biggest opportunities and risks in the stock market. And as always, this video is for educational purposes only and should not be considered financial advice. Thanks for watching, and I'll see you in the next video.